This is a lecture from OpenTuition.
Hello, I'm going to be talking through a question set by the ACCA called Morph, a 30-mark question, and looking at it in the ACCA software to try and indicate how much I would type and the way that I'd be using the software. This is a 30-mark question. Initially, when you open up the first page, there's a huge scenario. I would not start by reading the scenario. I would just have a look at the requirements first. So sometimes you need to scroll up and down just before you can move between requirements. Number one, explain the benefits of audit planning. That is a knowledge question, isn't it? So that could easily be done straight away. There's no reference to Morph, so it's just a generic question on whether audit planning is a good plan. Then the next one is the big one. Describe 8 audit risks and the response to risk. So we always get a question like that somewhere in the exam. One of the most important, but it would need us to look at the scenario. Number C, let's have a look. Describe procedures, substantive tests or procedures in respect of directors' bonuses. So that must be somewhere in that scenario. And finally, part D, a little bit's got added onto the question saying about a conflict of interest. And hopefully your brain would click and say conflict of interest is about having competing clients. Again, that's a fairly pre-learned answer, so that's probably another bit of the question that might be worth doing early on. So I'm just moving back now through these requirements and trying to get marks as efficiently as possible. Part A looks very straightforward, the benefits of audit planning. 4 marks presumably means 4 benefits. And do we need a big introduction saying audit planning is very important, blah, blah? No, that would just be a waste of typing, wouldn't it? Where would the knowledge come from? It could either come from your brain, which with respect to all of us would be quite hard if you're trying to make something up, or it will hopefully come from the fact that you've learned the benefits of audit planning from ACCA 300. When you're going through the learning materials, it's important that when you hit an ACCA and you see things like the benefits of planning, the types of analytical procedure, whatever it happens to be, that you've made a little note. I tend to say try and learn about 4 for everything. So if you've got 4 of everything from the knowledge bits of the syllabus, this question would be very, very straightforward. Otherwise, you will be spending hours and hours just trying to create something. We know it's 4 marks. Personally, I would number the points 1 to 4, just because then you're begging the marker to actually give you the 4 marks. So I'm just going to pick out a few of the points that I've remembered from pre-learning ACCA 300. One of them, which is the most important, is that it assists in identifying important areas in the audit, or you could say important audit risks. So it assists us in identifying important areas in the audit. And I might just add on there and just say, e.g., just to make sure I've got the point in, significant audit risks. So that would surely get you the mark. Would you get any more marks if you now expanded on it? No, that would be a complete waste of your time. Secondly, I remember there was a point about coordination that I'll have pre-learned. So it assists the auditor in if I can spell that, in coordinating with third parties Third parties who get involved with the audit are things like independent inventory counters experts, or I'm going to go for internal audit because we may need to liaise with them at the planning stage, so that's important. Number 3, it's to try and make sure that we delegate the work properly so that the junior audit person gets something straightforward like cash and bank, and the senior audit person gets something hard and subjective like impairment or something like that, or some complex area, financial instruments. So thirdly, it assists in, I think the word in the ACCA is selection of engagement team members with appropriate levels of capabilities. You don't have to say it in that detail, does it? But again, it assists in delegating work to staff who have an appropriate level of experience. Beautiful. Something else, very much if it's planned, it will also help later with the review process because the file will be organized. So I would say it will assist the partner or the audit partner again, or the audit manager in reviewing the audit work to date. So the main thing, it's almost less about what I'm saying, but more about how much I'm actually writing. And then you're challenging the examiner at every stage, aren't you, and saying, well, I think I've put down 4 benefits, explain them just for a mark. So 7-8 words a mark, surely that must be enough. So I've dealt with A. I don't hang about. I'm going to go to the other knowledge bit, which was the 4th requirement. And this was the one about this word up here, which was the word conflict of interest, which I can see in the scenario. So this is just something that's been put right at the end of the scenario that wasn't there in the earlier requirements. So pause the recording for a moment and just have a quick look through that last paragraph, the top one on the right hand side. So this is a piece of ethical knowledge, isn't it? That it happens often in practice that an audit firm will audit competing companies. It happens because I specialise in construction companies. That's what I do. But because there's a risk that confidential information might drift between audit teams, it's important that safeguards are put into place. This is another bit, isn't it, which has been pre-learned before you actually do the exam. So you just want to get on with it and get the points down as efficiently as possible. The one thing we don't want to do ever is run out of time. So you perhaps remember, 5 marks, I want to make 5 points. First thing you have to do, isn't it, is to tell the clients and to get their consent. I suspect that if you just said tell the clients, that's only half a mark. So I think it's clients and tell them and consent. So notify, again, all the affected clients of the conflict and obtain consent to continue to act. Good. Think back through your brain what else you will have pre-learned. The key thing is they need separate teams. Again, that might on its own just get half a mark. So just in case, you could mention the fact you would have separate partners in charge. So I'm saying that each client, these are the construction clients, would have or might have separate audit teams and a separate audit partner. The next thing is you need to threaten your staff and warn them not to talk to each other. So we can say that team members, we're not going to use the word threaten, but they have to sign those things called confidentiality agreements. So must sign confidentiality agreements. Again, is that clear enough? It's probably clear enough. Again, but I'm just saying, confirming they will not discuss client issues with other teams. In addition, the firm needs to put in barriers to information. It's not really about locking the teams up, but what they do need to do is on their, for example, their electronic working papers, to make sure that one team cannot access the working papers of another team. And so they would often use the word barriers to information. So it's a phrase, barriers to information should be created to ensure that client data is not released to other audit teams. It's not James Bond, they're not trying to find out, but they might find out accidentally otherwise. A very good one, a very classy point that I always put in is that we need to make sure, again, not because I've made it up, because it's a requirement in ethics, is that a senior person within the firm, again, has to conduct a review of the safeguards. So there will be a review of the above safeguards by a senior staff member in the firm. I can always imagine three partners. One partner, again, is dealing with one client, one partner with another client. Another one is just making sure the safeguards are actually in place. Let's make sure those barriers for information exist and so on. We've now scored 9 marks. Our target on this question is 30, and we haven't even started to worry about the risk. 2 requirements left. Substantive procedures, which no one likes doing, and also, well, I like them, but you probably don't, and then audit risks. So we're going to have to work through this scenario now, highlight some risks and highlight some responses. They want 8. The problem with these columns is that when you highlight a risk, you need at the back of your mind to know what the response is, because otherwise you're going to leave the right-hand column blank, and that's a waste. As always, it does say 8, so you need to pick 8 that are fairly juicy and sensible. I think a lot of question practice helps massively here, because once you've worked a dozen or so of these scenarios, you get used to the audit risks that arise. You pre-learn to some extent what the impact of those risks is, and then you also, to some extent, pre-learn some kind of response. So it's no good arriving just saying, I wonder what I'd do from first principles. Everything is about doing some learning up front. So pause the recording. Spend 5 minutes just walking through, looking through, highlighting the words where you think there might be audit risks, and then we'll talk again. So I go down paragraph by paragraph, and then just as a gut feeling, there are how many paragraphs? 1, 2, 3, 4, 5, 6, 7, 8. 8 paragraphs, 8 risks. So all I'm saying is, look, don't find 5 risks in the first paragraph, because some of them are probably a bit trivial. So off we go from the start. I'm looking at the first paragraph and I can see one, which is a very common requirement, of course, and that is new client. So when you approach the new client, you can either go down the line of saying detection risk would increase. That's all right. I sometimes find it difficult to write anything sensible in the right-hand side there, because the one thing you don't want to write is something like, we will have to do more work, or we will be busy, because that would never ever give you any credit. So I think a safer thing with a new client is to say something like, last year's figures might be wrong. Last year's are published alongside this year's. Last year's might be wrong because we didn't audit them. That's a much easier way to deal with it. So I'm just starting off. This new client is Heart, isn't it? So Heart is a new client. Now we get to the magic word, and the magic word is risk. If that word is not in the left-hand column, and sometimes I mark and people don't mention it once, I think the chances are they'll get nothing. And if you mess up the left column, it's very hard to get the right column correct. So there's the magic word risk. Risk that you could either say comparatives or opening balances. It means the same, or effectively the same. I'm going to say risk that the opening balances are misstated because we were not the auditor. We're coming across now to try and solve that on the other side. If you're drying up, you can't think quite how to solve it at the moment, you could always leave it blank and do it a bit later. But in respect of that, I think a very easy one, if it was audited by someone else last year, is to have a look at their working papers. If not, if it wasn't audited by anyone, then we would have to do more audit procedures on the opening balances. That would get credit. Out of interest, those procedures would often be analytical procedures. If you've forgotten what those are, we'll meet them a bit later. But I'll just pop on the right-hand side. As a response, we need to review the working papers of the previous auditor. Why? To confirm no misstatements in the opening balances. Again, tempting to go on about it then. What if there is a misstatement? Just stop it. It's just a mark for the risk and it's a mark for the response. Coming down to the second paragraph, let's see if we can find anything exciting. Yep, very important one here. So audit risk can sometimes relate to individual balances and transactions that are wrong. Sometimes it's because lots of things could be wrong in the accounts, and that's because of deliberate manipulation by directors. This is a profit-related bonus. Other examples in scenarios would be things like the company is going for a bank loan and therefore there's a risk they might manipulate the accounts. So I'm bringing across the point that the directors receive profit-related bonus. Notice my sentence length, 6, 7, 8 words, or it'll be unintelligible. Magic word, risk of overstatement of profits. Again, give an example, and the easy one is just revenue, isn't it? Because revenue is what it's a good one. They could overstate revenue or understate costs, but keep it simple. E.g., overstatement of revenue, again, in order to maximize the bonus or boost. Better make that bonus. There we go. The ICEs suggest that where you have things like that which could relate to all sorts of balances, another one would be very poor internal controls. You can explain the response in quite generic terms, and two standard things that work for both this and very weak controls if they've got a new system that doesn't work is they need to make sure they're using experienced team members, not someone who's being sent out for the first time. So use experienced team members on the audit. And another one, a favourite, because that's maybe half a mark on its own, isn't it? So another favourite would be to say, exercise a higher degree, you know what's coming next, of professional with one F, please. Right, you're not penalised for spelling, but it just looks awful with two Fs. So exercise a higher degree of professional skepticism. Again, when I'm marking, some people will then go off and say, well, I'll define that now. It's too much, isn't it? Because the mark will be capped at a mark. You'll be saying with that one, well, I wouldn't be able to think of that. I know, and I wouldn't at the time as a student. But what I did is what you should do. You learn it, don't you? You say, when I see something like profit-related bonus, I'll write those two sentences. Don't, as always, make trouble. Next paragraph is talking about the customers paying a 25% deposit. So customers paying a 25% deposit, that is definitely, isn't it, something which is related to revenue, because they might book the revenue before control is transferred to the customer. Can you see, even if you're a bit rusty on revenue recognition, they're giving you the word to use in your answer. So you book the revenue when you give them the playground all finished, not when you get the deposit. If you do that, one, it's wrong, and two, you'll probably end up in prison. So let's just put down the point from the scenario. Customers pay 25% deposit at the time of order. Magic word, risk that, here we go, revenue. It's quite clear, isn't it, that it could be overstated, it's not understated. So be clear is overstated if the deposit is recognised before control of the asset passes to the customer. Beautiful, that's a good summary, isn't it, of that one? I mean, you could go on just to remind you about the accounting anyway. That money should actually be credited to what was traditionally known as deferred income. I think these days a more sort of trendy word is contract liability. So now I need to do some more work. So shall I just put do more work on revenue? It sounds awful, doesn't it? So there are a number of different routes you could use for that. it's asking about response. It's not specific about controls or substantive. So I'll suggest two that you can sort of use as jokers in this situation here. One is, if you went down a controls route, I would give credit if you said, for example, evaluate and test controls over the recognition of revenue when, or non-recognition of revenue, isn't it anyway, but when deposits are received. That's a good one. So these words, evaluate and test controls. Another joker, I think, that you can play in questions like this is the best form of audit procedures is analytical procedures. So sometimes increasing analytical procedures on revenue recognition would work, might work. I'm thinking aloud now, maybe that they're it's not quite like selling sausages, is it? So maybe their work arrives on a bit more of a one-off basis, so perhaps that wouldn't be such a good one. But another one I could go for is, remember the assertion, the primary assertion in the P&L is cut off. So don't say increase work, but if you said increase work on the cut-off assertion, it makes a better answer. So I'm going to say increase cut-off testing. Again, on revenue. It's particularly, isn't it, around the year end, around the SOFB date. I think that's better than analytical procedures. I'll find one of those in a bit. Next paragraph's got a couple of things in. It's got things about us going to the stock take. I think we're attending 5 out of 18 stock takes. You could go down that route. The only thing I'd say is you don't want to have some dreadful audit approach saying attend stock take, because all auditors attend stock take, so you might end up with something a bit wetter. But there's something much more interesting, I think, in that paragraph, which would be much easier to talk on. That's this warranty provision. So bundled in with the playground is that they'll come and repair the playground when the little children smash it to pieces. So actually, that's a bit easier to talk about, and we know about provision accounting, don't we? Currently, the provision was 6% of revenue, it's now 2%. That is clearly or very likely to be an unjustified claim. Perhaps it links back to profit-related pay. So I've noticed that the warranty provision is decreasing from 6% of revenue to 2%. So 6% of revenue to 2% appears to be unjustified. Therefore, risk that, well, you could say the provision is understated. I'll go for that. The other side, though, is that, of course, it affects profit. So I could or as well say that profit is overstated. So that's fine. It appears to be unjustified. If directors are doing something wrong, clearly in that case, there would be some credit at least for asking the directors what their reasons are. On its own, that may only get half a mark because oral evidence is never great evidence. However, what we probably need to do is just to benchmark it and say, well, is this 2% actually justified? And that's where we could look at the contracts in the year that's passed and see what the claims were. When you do that and you do that comparison, a comparison of the financial information, sometimes otherwise known as analytical procedures. No need to call it analytical procedures, you could just use the word compare. Or you could look at other industry data. Maybe you might find something from the financial statements of competitors. I think it might be difficult in practice, but I would probably be likely to give it a bit of credit. So I think I'm going to say, I'll start the sentence with analytical procedures. On its own, that just sounds like a piece of jargon, so nothing yet. But if I now say what I'm doing, compare historic warranty claims to revenue for current and previous year. There you are, to confirm whether the change is justified. We're not being asked for detailed tests, but if you sometimes put a bit too much detail, you can't really go particularly wrong. 1, 2, 3, 4. We've done 4, haven't we? Next one, much easier, I think, to explain here. It's about research and development. There it is. As you know from your accounting studies, research costs must be expensed, development costs must be capitalised, but only if they meet the relevant criteria. Obviously, you cannot possibly sit the audit exam unless you've got your basic accounting sorted out. So when you started your accounting studies, you did an exam in financial accounting, not financial reporting, but financial accounting, the very basics. It's that level of knowledge we must be able to get right. So it's possible that the 1.2 million has been overstated. So I've noticed that 1.2 million has been capitalised as an intangible asset. Ready for the magic word? Yeah, risk. No word risk, don't give yourself a mark ever. So risk of overstatement of intangibles and again, some people write, well, if this complex rule has not been met with. If a student writes that, I tend to assume it means the student doesn't know what the complex rule is. So I think you're safer to say, be a bit more specific. Let's just have a look. This is in respect of a new building material. So you could use words like, if the project is not commercially viable. Another word you could use is or technically feasible. So at the moment, there's 1.2 million sitting on development costs. You need to get a breakdown, don't you? So you need to get a breakdown from them. Go down the invoices and say, is that a development cost? Is that a development cost? Is that a development cost? Talking probably to relevant staff as well. So definitely anything that needs breaking down, obtain a breakdown of development costs. From where? From the library? No, from directors. And then agree costs to supporting. I don't usually like the word documentation. I can't think of a better one because it might be invoices, it might be payroll records. So I'm going to use documentation. Again, confirming that the costs, you could say, should be capitalized. Another way of saying that is something like are capital in nature. Just good to have a bit of variety for you, isn't it? Into the next paragraph, they've paid a deposit on a machine. Good. So when they receive a machine, they should capitalize it as a machine. My year end up at the top is September. And in fact, they're not going to get the machine until October, it looks like. So the key thing is the treatment of that deposit, isn't it? So they could book it in the wrong period. They could book the PPE even though it hasn't been arrived. Only when the big lorry arrives and the PPE is delivered, that's the time you should actually book this machine. So I'm going to go straight in and say, if they've booked it as PPE, that's wrong. It should be classified somehow else. I suppose it should be a prepayment, effectively, again. So how much was the deposit? Try and use the numbers in the question. It makes it easier for the marker to know what you're on about. 1 million deposit has been paid for the new PPE, which will be delivered after the SOFP date. Risk of overstatement of PPE if this is putting something in PPE, a word is capitalized. You could say if this is capitalized in error, or if you could say if it's put in, well, if it's recognized in PPE in error. You could also mention, of course, the understatement of prepayments. So if this is capitalized in error. Now that's a really easy one to solve, isn't it? Is it in PPE or not? Where could you find out? There are a couple of places you could look. You could look at the general ledger, or nominal ledger, the account there would show the cost of the machine. Or I could look, they might have a schedule of additions, or maybe the one that we all know is the fixed asset or non-current asset register. So there we are. I'm going to say inspect or review the non-current asset register to confirm that this item has not been capitalized. If you want to take it further, let me just spell that word first. You could just say, if there is an error, you have to ask the directors to change the accounts. You can't change them yourself, that's trespass. So what you must do is propose adjustment to the financial statements. In the same paragraph, although I said I'd probably only pick one a paragraph, there's one that's just too tempting because there's this rights issue down here, which is a very easy one to comment on because they can easily get the accounting wrong. As you know, the nominal goes to share capital, the excess goes to share premium, which is part of other components of equity. Companies can get into a real pickle with this. And therefore I'm going to suggest straight away that could be an error because it's complex. So I'll plunge straight in and say that the right issue is a complex transaction. So risk of misstatement of, well, share capital. I'd perhaps write that in full actually. And share premium if the amounts received is incorrectly. My sentence is a bit long. I don't like long sentences. There we are. Entered in the system. So, in respect of that, I need to make sure, don't I, that it's been done properly. So where will I see the split? I could either look at the accounts, the draft accounts, or again at the nominal ledger. I'll go for the draft accounts. So inspect draft financial statements. Inspect draft financial statements. To confirm the share capital, share premium split, and recalculate to confirm accurate. How many have we got so far? I think we've got 1, 2, 3, 4, 5, 6, 7. So what else have we got? Well, there's a service organisation which we would have to liaise with, the payroll bureau. But there's a much easier one down the bottom, isn't it? Because there we are. They have not disclosed directors' remuneration properly because it's onerous, they can't be bothered. They'd rather watch Oprah Winfrey on the TV or something like that, I guess. So that's disgraceful, isn't it? So you have to comply not only with IFRS, but of course your local legislation as well. So remuneration has not been disclosed in accordance with local legislation. What word are we missing? Risk. Risk of misstatement. Risk of misstatement. There we are. Of remuneration disclosure. There's no point in going on about it anymore, is it? They should have, they haven't. So we don't have to write an essay and say the directors need to go to prison. So I guess you could ask them why. They've already said why. I suspect by saying discuss with them the reasons might get half a mark. But to me, that just simply needs to go into the accounts. So I would probably say, review the local legislation, to confirm disclosure requirements. Once you understand that, we can then say propose adjustment to the financial statements. There we go. No reference to ISAs or anything like that. Hopefully my grammar's not too bad. If your grammar's a bit bad, will it cost you the exam? No. All they need to do is to make sure that what you're saying makes sense. They're not out to catch you. Anything in the left-hand side must refer to risk. Anything in the right-hand side, responses, particularly if you're not in audit, and even if you are in audit, I think a lot of the time is rote learning of the standard responses for some of these things, because you've learned, haven't you, that if it's simply something they've done wrong, you need to propose disclosure. If it's something like weak controls or the risk of deliberately misstating information, words like experienced team members and professional skepticism and so on, and that would give us a good answer. Now we get to the final bit of this question, which was to say substantive procedures to get evidence about directors' bonuses. So let's have a look at what we know about bonuses. It's right down the bottom here. No, it's right up the top. There we are. Directors are paid a percentage of bonus based on profit. Now, it does say substantive procedures. Substantive procedures are anything testing the numbers, aren't they? They're not testing controls. So it's not about seeing whether the scheme was authorised. That's a test of control, really. I just need to make sure the numbers are not misstated in the accounts. Although it says 5 marks, that means 5 procedures. Will I get 5 out of 5 here? Well, you may not be able to. Is that the end of the world? Not really, because you've got all the other marks so far on the question, so it's always going to be a bit harder. That's just going to happen. So you have to be realistic about this. But let's just try and think about all the sources of information and then try and construct some procedures. So the bonus is based on a percentage of profit. The directors presumably were told about the bonus in their contract of employment or their bonus contract. So let's start with that one. Start with a verb. So inspect. Directors. It might be actually a sample. Don't know how many directors there are, but we'll go for directors. It's okay. Contracts. Why? To confirm, again, the bonus percentage stroke terms. Is it something you could do? Yes, you could. Now, where else? What else? Where would we find the profit? Well, presumably, we'd find the profit in the accounts. So to inspect, draft financial statements to confirm the profit before tax. So the contract said it's, say, 3%. The profit before tax said 10 million. Then someone has to go 3% of 10 million is whatever it is, however many $1,000. So that must be on a calculation, mustn't it, somewhere? So obtain calculation of bonus. They must have it somewhere from management and re-perform. Do it again. The calculation to confirm accurate. Now, what else would be relevant? Well, I suppose, I don't quite know when it's paid. I suppose it's paid just after the year end. So I'd get comfort about the bonus if I knew it had been paid. Where would I look at to see the amount paid? I could go the cash book and I could go bank statement. I like bank statement because at least it's external evidence. So inspect bank statement. That's a word I'd never abbreviate, because if you put BS, they'll think you mean balance sheet probably. Inspect bank statement to confirm amount paid. I guess that's after the year end. And agree, possibly you could say agree to the financial statements, or you could say the general or nominal ledger. I think just by looking at the bank statement you've really written enough, but it's too late now. I've written this. Agree to general ledger. So that stage, isn't it? You'd be sucking your pencil a bit, or I would, saying I'm not sure what else to say. I suppose you could cast the schedule. That might get a mark. Where else would there be details of this bonus? Maybe in the board minutes, actually. That's a possibility. I'll put that down as a fifth one. So agree the bonus paid to the amount recommended in the board minutes. Plenty. So 5 marks. Again, very hard, I think, to get that, but I don't think that's the end of the world. There we are. There's a review of question 1 there for that particular client, Hart. Hope you found that useful. Thank you for taking the time to listen.